Welcome to Evolved Radio, where we explore the evolution of business and technology. On the podcast today is Chris Day, CEO of Top Down Ventures. Chris is a well-recognized member of the MSP channel as a founder of IT Glue. IT Glue's remarkable growth curve and industry attention is unlike anything we've seen in the market. He recently exited IT Glue after selling to Kaseya. Now he's working with SaaS application entrepreneurs to provide capital and scaling strategies for their businesses. In our discussion, we catch up with Chris on his recent M&A activity with Glue and Fully Managed, the projects currently on deck at Top Down, and we discuss the current M&A madness in the MSP channel. It's a great conversation, so strap in, get ready. If you enjoyed the show, be sure to subscribe on iTunes, Stitcher, or wherever you get your podcast from. Also, be sure to check out the webpage evolvedmgmt.com/podcast for show notes, links to my guests, and to check out previous episodes. Now let's get started. Joining me on the podcast today is Chris Day, CEO of Top Down. Welcome to the podcast, Chris.
Thanks, Todd. Thanks for having me.
Excellent to have you here. I think most people will recognize your name from the MSP industry. You put together one of the most recognized brands and one of the largest MSPs in Western Canada through Fully Managed. And people will certainly recognize your success in founding and developing IT Glue.
Thank you so much. Yeah, it's been a crazy whatever that has been, 17 years now. It's been a long road.
Yeah. Well, congrats on all the success. I think it's interesting for people that don't know, maybe catch you up on what you've been up to. So Fully Managed, your MSP was recently merged with CareWorks, and you have also sold IT Glue to Kaseya. So do you want to catch us up on both that, the sale and the merger activity that you've been going through?
Yes, sir. So 2018 was definitely a very big year. Fully Managed, I started the thing in 2002. Like a lot of people that have started MSPs, it was just me at the beginning. Grew that over the years to become, as you said, one of the larger MSPs in Western Canada. I've always kind of had a growth focused, mindset. Maybe sometimes, biting off more than I can chew for sure. But, through the years, it was able to grow that business, eventually acquiring a business that, involved Joel Abramson with Packet Safe. And, ultimately he, after kind of working together for many years, took the helm as CEO, maybe about 5 or 6 years ago. 4 or 5 years ago. And then we kind of came across this opportunity of, we're going to continue to grow this thing organically. We're going to expand geographically. Are we just going to leave it as is? And so, the opportunity came up with Mark Scott, and CareWorks. Now CareWorks Fully Managed, which is pretty cool to kind of put the two businesses together. I think current count 230, 240 employees in that MSP combined now. It's a pretty good size.
That's big.
National footprint. Very cool things that they're doing there. And part of the reason I wanted to do the deal, was that I would continue to be involved, at a board level with the company, post merger. And so I'm pretty excited about that. They've got a huge footprint in ServiceNow, which is sort of like, ConnectWise or Autotask for very mid-market companies and larger companies, and basically a full ERP, as I'm sure you know. So I'm kind of excited to break into that industry because a lot of the tools that we're working with are ripe for that industry as well. So that happened. All the while, over the last 5 or 6 years, was building IT Glue. Obviously, as you said, became a huge business, like much larger than Fully Managed ever was. And I was pretty humbled by that experience. Had the opportunity to work with Insight Venture Partners and ultimately Kaseya, they're one of their portfolio companies, to put IT Glue together with Kaseya, and that kind of wrapped up in the end of last year. So I think we built an amazing product. I've a lot of great feelings about the people and the team that we built there, and sort of the problem that we solve. And I feel like it's going to continue to have a great future. But I'm also excited about moving on from those two things and focusing on a few new things.
Yeah, I think something to highlight is just the meteoric growth of IT Glue. Like for those that don't know, we worked together at Fully Managed. I was working for you there, and I saw saw you building IT Glue and working long hours in the demo space and guerrilla marketing. Really, it was kind of you and a few developers really kind of putting that together from the ground up. And 4 or 5 years later, it's one of the biggest brands in the MSP space. So I can't think of any other brand or product that grew so quickly and attracted so much of the market.
Yeah, it's insane because I think it exceeded whatever expectations I had. And by the end of it, I mean, I was pretty close, and I still remain close with a lot of the other big companies in the MSP sector, ConnectWise, Autotask, now Datto, SolarWinds, et cetera. And obviously Kaseya. But the number of logos that we were adding and the amount of business that we were adding in a single month, my last month in November, I think we onboarded more than 400 MSPs in a single month. Like that is like ridiculous growth. And so to be able to achieve that is something I'm pretty proud of. The big thing and something that's I think is kind of interesting is as easy as you could get value from IT Glue quickly. It's still a kind of a transformational sale. You're getting someone to do something that they've never done before, like document properly. And so to be able to get that kind of traction on a product that requires, a fair bit of onboarding and implementation and transformational change within the companies that you're selling to, is pretty incredible. So yeah, it's been insane. So we'll see how that goes in the future, but I feel like I left it in a pretty good spot.
Awesome. And just to underscore, you're not involved in IT Glue anymore. You've sold the business and not involved, but you are still remaining involved in fully managed CareWorks in a board position then, right?
Yes, exactly. So, part of why I've got a lot of equity tied up in the combined brand as well. And so part of why I did that is I see a big future for CareWorks fully managed. They've got, the MSP, SMB MSP division, like the traditional managed services, but they've also got a senior care division, which is the technology around senior care. And then they've got a ServiceNow consulting division. So there's 3 kind of large divisions, all with great leadership. And so I'm excited to kind of participate and kind of break into some new stuff that I've never personally been involved in before.
Yeah. I think it leads into a pretty hot discussion lately is the M&A activity, both on the tools side as well as the primary vendors like Kaseya and SolarWinds and ConnectWise. Everybody's out buying somebody. Any thoughts on sort of your view from being involved in that M&A and activity and sort of the fever pitch that it's reaching right now?
Yeah, I mean, I was kind of waiting for the thing to taper off, but it sort of still isn't showing any signs of slowing down. I think I saw yesterday it was a $35 or $38 million raised by venture capital for an MSP, which is very new to me. Where they're going, it's growth capital, not private equity buying it out, which is what we've been seeing a lot of. So, I mean, I think it's got to be near the top in terms of the heat. The multiples that people are demanding on good solid MSPs have never been higher. I think there's plenty of demand. I still think the MSP market is tough. It's a business that not a lot of companies figure out how to get the margins right and how to scale well, but certainly people are starting to recognize the value of those businesses and the recurring revenue that's there and the relative stability of that revenue versus a lot of other like pro services type businesses, VAR businesses, et cetera. So yeah, I don't see any signs of slowing down. And I think not just the MSPs, but all the MSP ecosystem tools. Obviously, me being personally involved with one such tool and one such acquisition, the money's out there for the right tools. But they're pretty stringent on what they're looking for. It's not an idea. The idea, very few people are putting up money for ideas, and I get a lot of ideas that come across my plate too. And I like to see traction first, because it's one thing to have a great product. It's another one entirely to actually get people to buy it. And so I think that's I personally run across a lot of MSP owners that would love to be in software, and I don't blame them. Software is a great place to be. but it's also, it's one of those things where a lot of software investments, as we both know, just become vaporized and, and all that cash just disappears. So
Yeah.
thankfully that didn't happen to me with IT Glue, because I spent a good, I remember sitting in the corner, like you said, working on IT Glue with the candle lit and a bunch of developers pounding away. And, I think I would have lost a little piece of my soul if it never took off. So
yeah, I think in the development you were quite cautious as well. Like I remember the sort of first year that you were in development, you were considering kind of going to IT Nation and kind of unveiling the cover, but you held off and said, no, I want to continue to tune this and make sure that I get it right before we really start to pound the pavement and bring people in. I think it sort of goes exactly to what you're suggesting is. You can have a great idea. Ideas are cheap. Execution's a lot harder. So getting it right, I think, is critical in that aspect for sure.
Yeah, execution, man. I mean, I'm pretty sure I know that. I think that exists in our top-down mantra there, growth by execution, and I 100% agree. It's executing the idea, and often I think a lot of people get wrapped up in it is just the product, but I think what most entrepreneurs struggle with, in my experience in this ecosystem and beyond, is the go to market. How am I going to get so yes, I need a minimum viable product that people will buy, but then how am I going to get them? How am I going to price and package and promote that thing so that people will actually buy it, to allow me to afford to add all the stuff that I know needs to be there that's not there today.
And that's a good segue. You mentioned Top Down. I introduced you as the CEO of Top Down, and people may not be familiar with the company. So let's switch from what you've done to what you're doing. Want to give us a rundown on what you're up to now?
Yeah, so Top Down, I've had it for a long time. Like way back as a company, it existed in a holding format for 17 years. But in the last 3 years, I've started to develop that into a kind of a hybrid private equity / active partner management strategy. So an example so we're currently invested in 4 companies. I'll talk about the 3 today that are software related, they're sort of on the same trajectory as IT Glue. One of them I think everybody knows pretty well, the Warranty Master platform. So that Warranty Master's got 25 people now. It's scaling hilariously. It's got a similar number of partners to IT Glue. So it's right around the 5,000 mark, or maybe 5,500 partners now. But we achieved that with 0 salespeople. So wow. Whereas IT Glue's sales team was 35 people to get to that point. So a little bit of a different animal. Obviously, a much lower cost product. But it's not a transformational sale. So I've been involved in that company since it started. My brother Anthony is the president, CEO of that business. What we've done at Top Down is we've said, hey, these companies that have 20 or 25 employees, or 5 employees, or 2 employees, but have a great product, they're pretty, no offense, pretty poor at the execution, and pretty poor at go to market. So everything from the financial aspects to recruiting good talent and just managing HR, because people are, like an MSP, people are really the key to scaling these businesses, to like sales prowess, to marketing skill, and not just a graphic designer, but what's the plan to get this thing, get our leads from like 20 a month to 1,500 a month, and which is where we were at at IT Glue when I left. So I feel that we're uniquely positioned to provide direct, like instant value to these entrepreneurs and say, listen, we're going to get you, another 5,000 customers in a very short period, because we know exactly what to do. We've got the playbook. We know which events to go to. We know where to invest, where not to invest. We know what kind of people are needed. We know we have job descriptions for every possible sales role and marketing role under the sun. We have a pool of developers and talent that we can access, and so on and so forth. So it's pretty cool. So that one was a no-brainer. Obviously, we're helping Warranty Master to grow. These companies actually, we've got an office in downtown Vancouver. They actually sort of are embedded with us, which is kind of a unique model. The incubator or accelerator concepts that exist, I guess we're kind of like an accelerator on steroids in a sense. A lot of accelerators or incubators are like, okay, you've got your product, like get out. We're kind of like, no, we'll have you here along with all of our executive team with Top Down until you literally can afford all the pieces of the puzzle, and then we're going to kick you out.
Yeah, that's interesting, because I was going to ask, or is incubator or accelerator a fair description of what the company is doing? But I think you're right. An incubator gets you to market, whereas you're kind of assisting companies that are basically already in market, but to quadruple them or 10x, as they like to say in Silicon Valley. Right?
Absolutely, yeah. We're 10xing them like as quickly as we can, and it's kind of unique. Like we have weekly executive meetings with each company. I'll tell you the other two in a minute, but and our team participates in those meetings. So we've got our director of HR virtual. Our VP of finance virtual, our sales VP virtual. They can't afford any of these roles, but in the weekly meetings we're sitting with these entrepreneurs and like giving them that high level strategy, like these are the things we need done that are gonna help. And they're like, in my experience, just like, tell me more, like give me more, tell me more, right? And so it's pretty cool. And then, as soon as they need it, we're the first to say, well, get your own marketing team or get your own finance team or whatever. So I think Warranty Master probably isn't within the next year we're going to kick them out of here because they're taking up too many desks already. So, there you go. That's one. The other two, pretty excited about as well. So one company I think more and more people are getting to know, Backup Radar. Patrick Leonard, great guy from New Orleans. We bumped into him through the years and just started chatting and he's a busy guy and he's got a ridiculously cool product that I'm excited about as well, because it's not really an MSP only product, although it integrates to all the MSP tools, of course. But it's like a product for any IT manager or any IT administrator that manages backups. And so it has a very broad TAM, total addressable market, much broader than I think IT Glue has in its current state, for example. So pretty excited, low cost product, extreme value of just consolidating all your reporting across many different backup platforms into one pane of glass. It's one of those like no brainer, like you turn it on, you're like, oh my God, I wish I had this like 3 or 4 years ago kind of products. And we're helping him to scale, and it's going really well.
Yeah, I'll pause on this one. I really like Backup Radar. When I first heard about it and looked at it, I was like, oh, okay, another backup software. And then I kind of dug around and I was like, oh, consolidation of logging and information from all of the disparate platforms. Okay, this makes a lot of sense.
Yeah, totally.
You and I had a lot of conversations about consolidation of tool stack as sort of an accelerator for your MSP business, and making things a lot simpler in your backup platform is a great idea, but in execution, it's really impractical, and for a lot of different reasons. It's not that you can wave a magical wand and standardize on a particular backup platform, but that is not going to always be everything that you have on that single platform. So I thought this was a great idea, just that you don't want people logging all of their backup alerts and having to service it through tickets and coming through your RMM, or at worst going to 5 different platforms to ensure that all those backups are happening. Single pane of glass, and away you go, right?
Yeah, and I mean, I remember, and it's still a problem. Things like, okay, we're moving a lot of workloads to the cloud, obviously, a lot of stuff in Amazon and Azure and whatnot. And like, okay, we're doing, backups in Amazon. Like, how the heck do I, but then I've got this Datto stuff or this, Veeam stuff. And like, how do I get efficient managing all 3 of those things at the same time? There's literally no solution that I'm aware of that a single MSP has got running on everything. It's just not possible. I've got lots of MSPs that have standardized on their favorite platform, for like on-prem backup, for example. But usually that's like, maybe that's 70% of their backups are on that, and then there's still the other 30%. So yeah, it's pretty exciting. And the other thing I love about Backup Radar is the name. You'll notice like every company I've ever been involved in, the name is like what it is. Fully managed. IT Glue IT. Warranty Master the warranties. Radar, backup the radar. Like it's all the same. So I don't know why, but I seem to be connected with these companies that the name is what it is.
Yeah. No, you've always been very particular about branding, so that makes sense.
Yeah.
So the other one I'm quite excited about. Well, going to lead us into to the third one you'll disclose.
Yeah, so the third one is called Socket today. It's being rebranded imminently, like in the next couple of weeks to month-ish type time frame. Socket, soon to be known as Quoter, Quoter, and that is, as you might imagine, a quoting platform for not just for MSPs, but initially obviously for MSPs. So a great vision for the product, a totally, I hate to be cheesy and say paradigm shift, but a real paradigm shift for the way the incumbent tools address backup. It's not going to be for everyone. There's probably going to be 10, 20% of MSPs that say, I need, super complex stuff that is maybe beyond the scope of a nice, simple cloud-based app, but it does have all the integrations that are needed, the Tech Datas and Ingram Micros and ConnectWise and Autotask and all that stuff. So
this would be a competitor to Quozl and Quoteworks then?
Correct. Yeah. And a little bit of a disruptive model, and more will come out on this soon. But the idea that everybody in the entire company should be able to quote product. What does the customer see? Well, that, we can manage that through specific routing and approvals and different things. But the fact that, a technician on the service desk, someone's, has an opportunity at that moment in the service call to say, you know what, you should probably get a new computer. Would you like me to fire you a quote right now? Talking about getting the right quotes in the hands of the customer as quickly as possible. That's something that we believe in, and it's been prohibitive with all the other solutions that are out there. You're $50 to $100 per user per month.
Yeah.
For quotes. Of course, you're not going to pay that for a technician that's going to do, maybe a quote or two a day or one a week or whatever. But we're going with unlimited users.
Right. That's awesome. I think it's an important point because I see the implications of this with the companies that I work with where, they have one or two licenses that a lot of people share, and it creates a lot of impracticalities around the usage of the tool, but I don't really blame them considering the cost and how much they use it. So it can be really cost prohibitive. And I agree. I think this is a space of the MSP market in particular that is ripe for disruption. And we've had this conversation in the past that Quoteworks, it works fine, but it looks like it was written in the 90s and the UX has never been updated. And Quozl is great. It's visually very pretty, but it's also really cumbersome and it's getting a bit dated. So I think I'm always a fan of competition. Even when you were with IT Glue and people would ask me, what do you think of IT Glue? I said, it's the best platform. And they're like, well, what about others like IT Boost and the other platforms that are coming up? I said, great. The competition benefits the consumer, right? And I think it's important that all of the vendors continue to stay on their toes. So I'm glad to see you kind of throwing a wrench in sort of the current dynamics of the quoting industry right now.
Yeah, it's I feel the pain of sort of the incumbents and to a large extent IT Glue. The larger the company gets, the bigger the engineering team gets, the more red tape and process and technical debt happens. It becomes really challenging to be nimble, and it's going to happen to all the new guys coming too. It's just a sad reality, and so. I think, like I said at the beginning, there's platforms that have like tremendous, robust capabilities that maybe we won't have, and that's okay. We don't need to be, the market needs disruption. The market, there's probably a lot of people that could be quoting that aren't, and so we think we'll change the dynamic a little bit. And obviously our story being that we're kind of funded and backed by top down, it is part of our value add to the entrepreneurs. By the way, the founder and CEO of that is Mike Walsh. And I don't know if a lot of people know, but Mike Walsh was the guy that I worked with, like the two of us, built IT Glue, at the very beginning. And so he had his separate company and, software development outsourcing firm basically based here in Vancouver. He's since dropped that, and him and his partner in that business, now that we're invested, are going all in on the quoting product. And so it's sort of like a full circle, kind of a neat opportunity for me to invest in him. And previously he was in us kind of thing. So
yeah, that was how I sort of put together like what you were up to when I was surfing around on those platforms, I was like, I recognized the name from when you were working with them at IT Glue, and I was like, oh, okay. So
Yeah.
it drew a few of the threads together. Yeah.
Well, it's funny. I mean, this is just a totally aside, but I sat down and I remember Mike saying, you know what, we've got like probably 6 months or 12 months of work to do before we can get this thing, to the MVP to be able to sell to MSPs. This was like, 2 months ago. And I said, okay, well, give me the full demo because I've only had a, cursory look at everything. And so I said, give me the full demo. We sat down for almost 2 hours and he walked me through everything. And I said, dude, this thing is ready to go. Like there's nothing missing. You have the ConnectWise integration. You have the Autotask integration. You have the tech data and Ingram now. I think the approvals piece is like a game changer that's coming out in the next couple of weeks. With those pieces, you've got your MVP, and I'm telling you, like, yeah, it doesn't do grouped line items, subtotals, and it doesn't do like tax for every state. And I go, you know what? None of that's going to matter. I'm telling you right now, people are going to love this thing. And so he was like, really? I just thought it was kind of a funny anecdote that, engineers are never satisfied. But I, looking at it from an MSP's perspective, it's like, wow, this thing is like killer compared to what I'm used to.
Right. Yeah.
Yeah.
Well, we'll link to all of the products in the show notes as well if people want to check those out. I do want to get your perspective on sort of the MSP industry as well, and any thoughts that you have around what lessons that you've learned through your growth at the MSP and your conversion to the software industry, which is somewhat parallel for a lot of people. A lot of people, as you noted, kind of have those MSPs. They find a need and a niche, and they start building something off on the side to serve their own needs, and then they spin it out to a product. So any thoughts on the MSP industry as a whole? Yeah,
I've gone through this with a couple of great entrepreneurs that have started MSPs, and I always kind of, I guess, like I said at the beginning of the call, like I've always been growth focused. I always had in my mind, I'm either going to like grow this and make tons of cash off of it on a recurring basis, or I'm going to grow it and sell it, or I've had a vision of like, I want this to be a national brand or whatever that is. I've always had something like that that's driven me. But you go through a lot of these companies and you realize not everybody has that kind of a vision, right? I mean, your story is probably different than mine. We want to build a sustainable business that has long-term viability, and it's good for my family, and I enjoy what I'm doing. And I've found some great businesses like that. Like an example, My IT, which were, as much as I'm out of the fully managed thing somewhat, I'm on the board. Well, part of this deal with Patrick, who also owns My IT in New Orleans, is we've become a financial partner in his MSP. And when we started digging into, the particulars, all the metrics, gross margins and staff retention and customer retention and all that stuff, I went, man, this is so different than any other deal that I've seen. Like there's like, for the staff retention was like 90 something % of staff had been there for 15 years or something. And it was like, that is impressive. So, and I looked at it and I go, you know what? They've created a great culture in that business, and it really works for them, and it works for the owners too. But then you have other guys who are, really want to spin up a new project. And Patrick was fortunate that we were able to work with him. And so now he's kind of got both. And I've advised 2 other guys, by the way, that were thinking about selling, that I said, why don't you hold on to it and work yourself out of the business while you work on your other ventures that you've got queued up. And if that's a mindset that you have, you can make it happen. So I think a lot of people think, well, I should divest, when they could look at this and say, there's a lot of people that sold MSPs, by the way, that wish they'd kept it and done exactly what I said. Like, because the thing is like a cash machine. It's a recurring ATM. And, it's hard work, but how do you fix that? You just, don't do the work yourself.
Yeah.
This
is an interesting point, because I think this is a great sort of learning lesson. This is something that I feel like I've had conversations with people a lot about lately, because there's almost like a FOMO feeling, fear of missing out feeling in the industry, where there's so much M&A activity going on. Everyone's like, well, maybe I should sell. And they put themselves up for sale, and they potentially get undercut on value. And then the first question I ask people is like, okay, if you're going to sell, what are you doing next week? Right. And they're like, well, I don't know, and there has to be a purpose towards, and I think it's important that you touch on this, is like understanding what you're trying to build and why you're trying to build it is probably more important. You need to answer that first before you figure out what the strategy is and whether or not it's actually valuable for you to go and sell your business, or just to continue to work on it, or go out and find a partner, right?
Yeah. So there's countless. So I've been in, I was in EO, probably 8 or 10 years ago. And a couple of years ago, I joined YPO, which has a lot of the world's most successful people are in this network. And you probably wouldn't be shocked to hear that a large percentage of people that sell their businesses do have a sort of an identity crisis immediately following. They're like, I've got all this money and I've got what do I do now? And in some cases, maybe the money's not enough to last them a lifetime. So you got to start again. And, if it's this is retirement money and I'm done and my family's taken care of for forever, then great. But even those guys, they say that golfing gets very boring when you're doing it like 7 days a week.
I can imagine.
So it's like, and there's only so many beaches you can lay on,
right?
Where you go, okay, I need to do something. And so, I think that is a real problem. In my case, from my own personal experience, I had so much going on other than my MSP that it was like a blessing for me to just I would almost I just need to get rid of this thing because I just don't have the bandwidth. And so, and I didn't, and the money wasn't really the primary driver for me. But on the flip side, there's great money to be made. CareWorks and Fully Managed, they're going to be on a tear. There's going to be some major M&A activity through that business, and so I'll enjoy being a part of that from the sidelines. And I think there's plenty of deals to be done. So if there's people that have other passions, certainly I've seen people pivot into all kinds of different stuff like marketing, consulting, MSP consulting, different things that maybe are more aligned to what individuals want to work on. So
another trend I think sort of fits into the same vein as well is what I've kind of termed a draft effect, where there's so much M&A going on at kind of the 10 million, even the $5 million level, that the people that are kind of 1 and 2 million are kind of trying to cobble together a cohort to be rolled up and sold. Do you see that trend continuing? Any feelings on whether or not that's a good strategy or cautions on that?
I think it is. I think if the strategy is to eventually get out, one of the things that a lot of guys fail to realize, I guess, is or gals, you put two companies together, they're doing $2 million each, and maybe that's a bad example at that scale, but you're a $4 million company with 10% or 15% EBITDA is worth more on a pro rata basis than a $2 million business at the same EBITDA level. So your multiples go up the larger the business, and certainly when you get to 10, 20, $50 million in revenue, the multiples go up. So, when I think to my own personal experience of putting Fully Managed together, the first merger that I did with my partner Charlene in Edmonton at the time, and that was I probably aged 10 years in 18 months. It was the hardest thing I probably ever went through, but it created the legacy for me. It jacked our values and allowed me to do all the other things, including start IT Glue, that I would have never been able to do without the scale. And so I personally believe that the problems get bigger. You have bigger problems the bigger you scale, but you also have more people to help you with those problems. And so I wouldn't hesitate to answer your question of if I was 1 or 2 million, to put 2, 3, 4, 5 people together and say, well, now we're $8 or $10 million and we have 20% instead of 100%.
I guess that's sort of my question, though, is that if you take a few businesses, cobble them together, you hit on it exactly, that the culture integration and the technical integration of those businesses it can be a little traumatic.
Totally.
And does that bring down the EBITDA in a short period? And I guess the process is you have to recover it. So you have to figure out what the long-term metrics of the business need to be. But I guess my caution is people, they maybe jump into this too quickly just to throw a few businesses together and then found that they've kind of tanked their profitability in the result.
Yeah, well, we made that mistake. And I think that's probably why I aged so much in those 2 years, but where we said, hey, we're so excited about this merger, and starting tomorrow, you're going to call into Vancouver instead of Edmonton. And we said, like literally, that's what we said. Like, here's an email. You're not going to deal with the people you dealt with yesterday. Now you're dealing with new people, and like the staff were like, we hate you, and the customers were like, we hate you, and like, okay, we screwed that up in every possible angle. So if I were to do it again, I would say we're putting the two businesses together, but they're going to run independently for quite some time. And but from an outsider investor coming in, they go, at least your shares are all in one pile. Even if the things run the same way, there's definitely going to be some efficiencies gained, like finance and HR and some ops stuff. Even if you just leave all the service to totally separate, even if you put three companies together, they all use different backup tools. As long as you don't try to immediately do it, you can gain it, but it takes some patience, and entrepreneurs are not always that patient. So
that's right.
Yeah.
Cool. So we'll look to wrap up here. Any spots that you would suggest? Actually, I guess one thing would be is if people think that they have a hot product that could use incubation and top down, are you accepting entries or looking for businesses? Or is that something that people should be considering?
Yeah, absolutely. I think, and even just to give guidance, we're happy to do that. If you just have an idea and just to start an early conversation, happy to always provide some thoughts. We're probably going to place, our target is to do one investment per year. And so, we haven't done our 2019 one yet. So we've got an opening there, and probably do one a year for the next couple of years, and then we'll see how that goes. But yeah, absolutely, reach out to me. LinkedIn's probably the easiest. You can find me on LinkedIn, and then we can definitely have a conversation. We've got a team here that now talks to entrepreneurs, gives them some guidance. A lot of times it's like, here's what I would do if you're really passionate about this idea, or maybe even say, we think that's a terrible idea, or this is what you would have to charge to make that work. We're more than happy to give guidance on some of those things. So, okay. Yeah.
Cool. Well, we'll link to your LinkedIn profile in the show notes as well. So we'll look to wrap up. Appreciate your time, Chris. Any parting words of wisdom or ask of the listening audience?
Go get it. That's all I would say. Get after it. All right.
Awesome. Thanks, Chris.
Thanks, Todd.